The company Block cuts its workforce by over 40%. And you can see here the stock surges over 20% on that news. What do you think other public company CEOs are thinking when they see this news? I mean, look, they've got a fiduciary responsibility to their shareholders. So what I want to do today is I want to share with you the statement put out by Jack Dorsey on why they're making these cuts. And then earlier today, Darius Dale from 42 Macro, before any of this news broke, kind of talked about, look, here's what's going to be happening. We're going to see more and more job cuts due to AI and more profitability. And the ultimate question is, where does that lead us as a nation and a world? Where does it end up putting us? Welcome to the Self-Storage Report. I'm Chris Berg, head of business development with Abernathy Holdings. So you can see the news here that just broke this afternoon. Then I want to share with you the statement from Jack Dorsey. I think this is really important because the way he breaks down what he's sharing with people, it's not because the business is bad. The business is just fine. They just don't need the headcount. So he says we're making the company smaller today. Talks about, we're at 10,000 people. We're now going to be just under 6,000. So over 4,000 people are going to be put into consultation, released. Talks about what they're going to do for the people that are going to be laying off, 20 weeks, things of that nature. But the important piece for you and I to look at is he says, look, we're not making this decision because we're in trouble, meaning the business. Our business is strong. Gross profit continues to grow. We continue to serve more and more customers, and profitability is improving as they are cutting headcount. Keep this in mind as I'm going to share with you this clip from Darius Dale in just a moment. But something's changed. We're already seeing that the intelligence tools we're creating and using, paired with smaller and flatter teams, are enabling a new way of working, which fundamentally changes what it means to build a company that's accelerating rapidly. So now I want to play for you this clip. This is Darius Dale, again, from 42 Macro, does a great job, obviously from a macro perspective, breaking things down. He does a thing called the Macro Minute. And just earlier today, he talked about, hey, we could see GDP growth actually decline, but profitability companies continue to go up, as he's talking about sort of his thesis on where he's going to be allocating capital himself, and obviously for people that subscribe to his service. But the important thing is you want to think about, so where does this leave us as a country? Where does this leave us as a world if we don't start to get our head, our hands, and maybe even most importantly, our heart around the situation that could be occurring over the next 12, 24, forever, really, with what's happening with technology and AI. So here's what Darius Dale had to say earlier today. It's a little bit longer clip. Bear with me, but I want to play this because it gives you some really great context about where things potentially could be headed.
I don't know what the end game is on all this, but from this starting point, you could easily see multiple years, if not at least a decade, of GDP growth slowing and profitability accelerating. And here's why. And I'll shut up and leave you with this final chart. Here's why. The true promise of AI isn't mere efficiency. AI is an effective tool to cut what is still most companies' biggest cost, which is labor. This chart, this blue line in this chart, which is sourced from our most recent, our monthly macro scouting report, our February macro scouting report. The blue line in this chart is labor's share of national income, employee compensation as a function as a ratio to gross domestic income. It's already been, we've been in an all-out assault on labor share of national income for decades now as a function of the laissez-faire neoliberalism movement, which prioritized corporate profitability over, the well-being of humanity. And that's something that obviously is ongoing and is likely to accelerate as a function of AI. The true promise of AI isn't that this line continues to trend down, is that the blue line falls off the bottom of the page. If the blue line falls off the bottom of the page, the red line is going to jump off the top of the page. And I'll do that very poorly. That's the true promise of AI. That's what I'm trying to explain to you guys. Is that you don't need people consuming stuff at Walmart. Maybe it'll hurt Walmart, but these companies could sell stuff to each other. NVIDIA doesn't sell anything to consumers. So I want people to realize that this divergence, which will ultimately end very poorly for society, may not end poorly for the stock market or the credit market on a, in risk manageable time horizon. Eventually, it will end poorly on a risk manageable time horizon as a function of the political response, and a function of the regulatory response, and a function of the geopolitical response, because this kind of stuff causes economies, inequality causes economies to go to war. If you don't agree with that, that means you have not read Peter Turchin's books.
So you can see he dives in here. We've had Darius Dale on the podcast in the past, and I just wanted to play that sort of elongated clip for you because one of the things that Darius does a great job of, as well as talking about the fourth turning. I've read the book. He's read the book. If you haven't read it, I would encourage you to read it. Neil Howe. But this is where things are headed. You have this much divergence as far as, wealthy people and poor people. And where does it lead? I mean, potentially to a president AOC. We don't know where this thing's going to end up, but we've got to do something for what's called this K-shaped economy and the people on the lower end of the K of that curve, because otherwise There's going to be uprisings, revolutions, who knows, but it's not going to be good. And typically a fourth turning ends in some sort of war and or world war, which it's pretty clear when you look what's going on geopolitically, that's where this thing could head. So really, really important to understand the dynamics taking place here with Block, these layoffs. Again, he's got a fiduciary responsibility to shareholders, so he's doing what he thinks he's supposed to do. But I think it's important for us as a society to see what's taking place. And again, it's not because their business is hurting. If anything, his profits are growing. So just be aware, as this is going to probably continue to happen more as more and more public company CEOs see what happens to their stock price when they make some of these decisions. We'd love to know your point of view. Love to know your thoughts. Please share. And again, this is the Self-Storage Report. I'm Chris Berg. Have a great day.